It all comes down to this week. We get to kick off the MAG7 earnings, and more importantly, SanDisk earnings, which is the market leader, up over 100% in 2026 alone. And then a nothing burger Fed that's likely going to be more political theater than policy. Oh, and speaking of policy, Saturday morning we do have a new tariff threat of 100% tariffs on Canada if they make a deal with China, which is kind of odd because Trump did encourage that deal to happen in the first place. Anyways, silver and gold are making historic moves to new record highs, and some of the most respected traders I know are even throwing in the towel on the short side, giving up on the parabolic top. There very well may be some signal in that alone. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 3+ additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame, talking about candle structure and location as we always do. In terms of structure last week, we're left with a green-bodied hammer-esque style bar, just simply meaning that buyers stepped up in a meaningful way off the lows of the weekly range, pushing price not just to the opening print, but through the opening print for meaningful range expansion in the upward direction, and of course, achieving a pretty strong close in the upper third of the weekly range there. So buyers are in control structurally. If we think about location on the bar-to-bar count, lower high here, of course, as well as a lower low. But look at the candle close back inside of the previous week's range. It'd be hard for me to say that this is bearish in terms of location. I would start to say neutral here. And if we think about this picture a little bit more holistically, I would say it's also fairly bullish. So let's just pause and talk about that for a second. I mean, if this was going to be a big look above and fail, and oh my goodness, markets are going to crash and burn, then the gap down is a gift to sellers. But where did they run out of steam? Straight into the weekly 20 SMA, and if you recall from last week's episode, we'd been talking about this 675 level. It's the top of the bearish engulfer from October 10th, as well as November 20th, NVIDIA earnings from the last cycle. That's exactly where buyers started to step up, and of course we've closed once again at the highs of the weekly range, right at the breakout point. So it doesn't make our job necessarily that much easier because this is still in tension here at around 689, 688.75, but I would say that there's a couple of subtle, compelling data points. Number one, the daily trend did flip to down, so this is now a firm higher low on the weekly. And then next, we had talked about last Saturday how the 2-week equal low here at 686 was also a key breakdown point. Well, the market gapped below it, failed to really find acceptance below it, and we closed above it as of Friday. So all things considered, the weekly chart is still very much so in an uptrend with a new firm higher low, and we've pulled back from the highest high in the trend count here. And I'm not saying that the measured move needs to be in play this week, but it very well could be with MAG7 earnings. That was at 730 if you take the fib extension, right? Let's also come in here with the Fibonacci retracements, just pulling from here to here. This entire gap down debacle from Tuesday took place over not just the 20 SMA, but the fib 38.2, qualifying all of this as bull flag consolidation. If we come in here with the anchored VWAPs on a weekly timescale, we're above the entirety of the stack as well. Again, we gapped into the top end, dipped the toe inside, and then ramped right back on out of it. So on the weekly timescale, again, I want to be very clear here. This is a weekly timescale. The chart is still absolutely bullish. And if we just check in on our high volume node, where are we relative to it? I would just say we're right at the high volume node, right? So with MAG7 earnings upcoming this week, the big question on the weekly timescale is, can we produce a higher high? We just confirmed a new higher low, a firm higher low on the weekly. The next thing that should take place in a healthy uptrend is a new higher high. So that's the big question. Let's take it on down to the daily timescale and just see if that seems somewhat probable. The first thing we'll start with is the expected move for the week. That is, of course, this gray shaded area right here. If you're not familiar with the expected move, check out the video tutorial in the top right-hand corner. If we're contained by the upper bound, the number is $700.55, implying a brand new all-time high and a higher high in the trend count. This is bullish. If we're contained by the lower bound, it's notably an equal low in here, and that's roughly around 677.91. I would say that this is a little bit more neutral on the downside. Now, if we think about the trend of the daily timescale, we know that this was a double top, and therefore your neckline was this low here from the Wednesday of 2 weeks ago. The gap down on Tuesday immediately brought in a lower low, so the daily trend did flip to down. But the question now just becomes, is it going to flip back to up just as fast as it flipped to down, right? And I know this is somewhat frustrating for us as traders. It's so much flip-flop back and forth. But as long as we're over 686, I would tend to think that as a balance range here, and again, that was just that 2-week equal low, 1 and 2, we're recapturing, as we say around here, reclaim and recapture at the same time. We're recapturing that low and balancing off above. And if you're someone who follows sort of the IBD methodology, Canslem, the Bill O'Neill stuff, right, then you know that what we're looking for to set this as a major low is a follow-through day, right? FTD, as they call it here. So if we are going to get a follow-through day, it needs to happen on day 4 plus of the sequence. Well, here we go. 1, 2, 3, 4. We qualify as soon as Monday happens. What we're looking for is a 1% up day on an increase in volume. It should be 1% or greater on an increase in volume. Well, I don't know about you, but it's pretty convenient that the 2-day resting period here on Thursday, Friday happened on tapering off volume. So to me, it looks like it's an attempt from the market, and we'll talk more about the context of still the problems that exist, really, in financials versus the Mag 7 here. We'll get to that. But the resting consolidation inside of this 2-week balance range seems a little bit more healthy as opposed to weak. You could see a very prompt recapture of the daily 50 SMA, and we're just dancing on the 20 SMA. I would tend to still align with the idea that it's possible we still have a daily lower high threat here. That has not gone anywhere, right? This could just end up being a lower high, and I would start to think of that as a, stronger reality, really, if we were to Brigade bolt early on in the week underneath 686. So bottom line on the daily time scale is that the 2-day equal low and that 2-week low from back over here at 686 is the new line in the sand. I'd love to be sort of like, really tied into that 688.75, 689 weekly breakout spot, but it's a little bit more nuanced than that on the daily, and hopefully through walking through what we just walked through, it's a lot of throughs, that's making a little bit more sense. Now, of course, on the top side, you break the 2-day equal high, and you should just be off to the races trying to make your equal high, and then, of course, on the weekly, trying to go for that higher high, and once again, the measured move of the flag is something like 730. I'm not suggesting we go there this week, but that's kind of what we have room to run into. Also, just a reminder, we do have an unrepaired overnight all-time high from CPI. Spider's cash is there at 697.30 in the after-hours session, right? The all-time high is at 695. In here, that's the level that I would use based on the hourly chart. So with that, let's take a peek on down at the hourly chart, speaking of hourly levels, hourly chart, and you could just kind of see that resting period here. Once again, I think that it would be or it would have been, I should frame it that way, it would have been a great opportunity for sellers to take advantage of a more meaningful lower high on that tariff reversal, the U-turn basically on Wednesday, if they yielded an open underneath 686 into the late stage or the second half of last week, just providing a very simple rejection of overhead supply, rotating back down to the equal low. Once again, this resting period here happening on lower volume seems like digestion of the U-turn in the upward direction, and as long as we're above this, I would start to just watch for the probability, right, of an hourly higher low to sustain, building out, really, you could start to think of this as just hourly bull flag. Right, so as long as we're over 686, that's the new sort of level I'm using as a short-term reference point. Let's just pull a fib from the low to the high. There's your fib 38.2. Perfect, makes sense. If you really wanted to have like a last-ditch effort, if you're trying to maintain more of a bullish stance, you could bump it down here to the highs. That would have been on Tuesday, as well as the morning high of Wednesday before the tariff reversal. That's 684.25. I don't love that because at that point, right, now you're really pushing it from failing the weekly breakout, daily lower high, not really holding the ideal spot here at 686. We know the market's been overshooting like crazy recently, so I really can't see it underneath 686 personally based on the push-pull that we're seeing in financials as well as Mag 7, the tech sector really, semiconductors, the whole 9 yards. We'll get into the nitty-gritty as the show wears on here. Let's pull out the intraday anchored VWAPs here and just get a sense for where we're at. You'll notice that if you just take the anchored view app from the Tuesday gap down, early in this upcoming week, it's likely to be confluence at 686 rather than that 684.25, which is the more optimal higher low to maintain if you're just going to build something like this and possible pathing in the upward direction. If you just open in this range and, Brigade bolt out of it, I wouldn't really fight that, and I would look to actually go with, right, on a situation that looks like that, hopefully with the strength of at least the XLK, if not both the XLK and the XLF, if financials can catch a little bit of a rebound off the bottom end of their balance range there. So simplified pathing, like what's the bottom line here, Matt? Just get to the point. If we're consolidating in here, let it be. Market's holding its breath ahead of the Mag 7 earnings. If we Brigade bolt here, I would look to go with. If we pull back, my first thought is that this should be a buyable opportunity, looking to go with back in the upward direction. If you start to balance and hold underneath 686, this is likely your short back in the downward direction there. Therefore, once again, I think it's fairly straightforward that your major zone to watch, really 686, confluence. We saw it with the fibs. We saw it with the whole 9 yards. I'll also, by the way, take a fib from the all-time high down to that low from Tuesday and just point out that we are starting to balance off over the 61.8, which would dramatically increase the odds of a 100% retracement, right? The more time we spend over the fib 68.1, the less likely it is that you could even think of this as a bear flag. I mean, forget about consolidation here, but the deepest retracement you typically want to see is that magic fib zone, the golden fib zone there, 61.8. So that takes care of that on the Spider's cash. Let's get into a little bit of supporting evidence, starting with our internals. If you're not familiar with the internals, check out the video tutorial in the top right-hand corner. So the big thing to talk about here is, of course, on the grinding action Thursday and Friday, does the market at the underpinning exchange level display more confidence on the long side or the short side? Well, Thursday, as we balance there, inflows in terms of volume, and Friday, really just kind of neutral, right? Market participants holding their breath. Technically, advanced decline line is positive on the Thursday session, negative but not horrible on Friday. Look at how flat the index score is intraday. A lot of nothing really happening on that Friday session. So the balance there, it's not like under the hood we're getting this sneaky divergence where, oh my God, volume flows were so substantially out of the market and everybody's selling this. Is this going to turn into this nasty lower high? I'm not seeing it, right? Which is why, just flipping back to the thoughts on the daily chart, the hourly chart, I lean a little bit more optimistic that this little 2-day range may resolve in either a higher low off the level or just a Brigade bolt that looks like that, right? These two sort of outcomes here, I would say, are the primary outcomes that I would be looking for, but we shall see, right? If we fail it, I'm not going to fight that, okay? So jumping back over to the tick, though, I do just want to point out the same thing, a little bit of push, a little bit of pull. No real, nothing major, I would say, intraday there that is changing the narrative of what's happening. Let's jump on over to the market profile, and what I find compelling here is that these points of control were left really low, right? We talked about this on Wednesday. That's still, a reasonable data point here to hold. If people are positioned, and it doesn't matter, you could put yourself in the shoes of buyers or sellers. If you're short from these points of control, you're either stopped out or you're like, oh my God, I don't know how much more pain I can take, right? Or if you're long from point of control, right? Just people doing business down here. That's the heaviest volume on both of the sessions. If you're long from there, you're just saying, great, I feel awesome. This pullback long is fantastic. It's working out. So what would be a reference point that I would continue to carry forward? Likely just the value area high from Wednesday. Get my days mixed up here. Shortened weeks always do that. Wednesday's value area high at around roughly 69.10. As long as we could stay over that, and that kind of aligns perfectly with the number we were just talking about on the Spider's cash. That is your 686. It's right there. It's basically that high from the Tuesday gap down where we sort of rallied and then failed, right? So as long as we're above that, these longs are still content. These guys are probably just like, yeah, fine, no problem, reasonable pullback, right? Value is not, overextended in the upward direction by any stretch. And by the way, if you missed the video tutorial for market profile, there it is, pointing to it now, upper right-hand corner of your screen. If you're not seeing it on your screens, right, remember to check down below in the description. It will have all the links to the videos down there, of course. Let's move on back to the platform, over here, and let's take a look over at the nasty NASDAQ. Let's take a peek at our good friend, the QQQ weekly timescale. Thanks, as always, for bearing with me as we get some charts configured. And there we go. Perfect. So on the Qs, it's a much different picture. I mean, in terms of the weekly bar, similar structure, right? Not as much of a lower wick, but solid green-bodied bar, closing strong in the upper third, not even upper third, in the upper 90% of the weekly range. Their really strong close structure is bullish. Same thing as the S&P in terms of location, bar to bar. You have a lower high as well as a lower low, but look at the candle close, almost unchanged from the previous week. So neutral, if anything there. We can clearly see the discrepancy in such that we have more of a wedge taking place on the weekly time scale, something that looks like this. And this is just a classic volatility contraction pattern. When and if we break out of it, we are looking for range expansion. When and if we break down out of it, we are looking for range expansion. Doesn't matter the direction, but I would expect a substantial next move in the market considering how sideways we've been. And does this make sense as we head into a major catalyst event like Mag 7 earnings? How could it not make sense, right? To me, this is primed for a move this week. Hence, once again, the title and the conversation we had in the intro, be it good or bad, I think that this consolidation is going to end sooner rather than later. So on the 20 SMA front, we are still holding there in a compression pattern. You don't really have a viable trend. So I'd just point out the 20 SMA holding is technically more bullish if we look back, right? This could be seen as a bull pennant after all. So tailwinds are pushing higher in terms of Fibonacci's. Where did we close relative to this? Pulling from the high down to the low. Right above the Fib 61.8, not really a problem from that perspective. What about our anchored VWAPs on a weekly above the entirety of the stack after gapping down through it? That looks bullish to me there. And what about our high volume node on a weekly? Let's just check in on that. It's slightly different here. Yeah, we closed above the high volume node, not by much, but by a little bit, just indicating to me that if anyone's long or short from here, once again, simple exercise, put yourself in the shoes of either side. Longs probably feel happy. Shorts are probably like a little bit more nervous, right? Shorts always, just by the nature of being short in a market that technically trends higher 80% of the time, shorts are inherently the ones who get nervous sooner. So with that sort of understanding, again, it seems to me that the tailwinds would suggest higher here. Let's get granular on down to the daily time scale. Oof, look at all these charts loading on Thinkorswim. Love it. In terms of the expected move, I would have to be bullish here, noting that the upper bound, I know it's really hard to see in there, but 636.67 is the number that I've got, or 37, excuse me, I got that backwards. 636.37, that's the number. If we're contained by the upper bound, that's clearly a breakout of what I would just consider a sideways balance at this point. It's no longer really a wedge or a triangle or anything with angles. It's, on the weekly it might be, but on the daily it's definitely a rectangle. So we either go on to produce a higher high or we just kind of have this equal low. So I don't know about you, but that doesn't really jive well for bears, right? Downtrends want to see lower highs as well as, of course, lower lows, not just equal lows. So expected move here is slightly more bullish. In terms of the daily trend, I can't really make a comment as to the daily trend because it's so neutral here. We did flip to down via the break of this low here, and maybe you could still argue for a lower high opportunity in this neighborhood, but once again, in this box here, it's more like, and I'm stumbling over my words because it's been quite frankly a little frustrating recently, but the NASDAQ's just been on an overshooting rampage. Right? So I don't really even know how much I'd like to trust this as a daily downtrend initiation underneath the low of this. If I wanted to be like strict, diehard, the system, and everything is always by the book, then yes, but we know that the market is sort of a blend of science and art, right? And at this point, I would say the art of understanding the personality of the NASDAQ is just such that it overshoots. And I don't want to get overly aggressive on the bear side unless I actually have to, right? And that would just be based on acceptance underneath this area here at 613. So more neutral in the midpoint of the range. You've reclaimed the daily 20, the 50, a little bit of a stronger close there on Friday. If we take it on down to the hourly chart here, you could just kind of see, remember we had an inside day on the S&P, whereas the NASDAQ certainly broke in the upward direction, pulled back, and is offering maybe the potential for a Brigade bolt over that high. Can we rotate to the top end of the range? That would certainly be within the cards. Remember, when we're range trading, it's really not that it's easy, but we can simplify the thought process in a range trade simply to buy the lows, sell the highs, right? And again, easier said than done. I'm not saying that this is just like, oh, everybody should be a millionaire and just do that. Easier said than done, but the point of the exercise is all we've really seen here is overshoot the bottom end, accept back in, retake the 50, and grind back up to the top end of the range. So unless this NASDAQ market wants to prove itself and get out of this box this week, which again, I think there are very high odds of that with Mag 7 earnings, just trade the range until proven otherwise. Ping pong back and forth. And then if Mag 7 earnings are a catalyst for this, great, we want to go with. If it's a catalyst to do this, we want to go with. Right? Market contraction does not last forever. Think about the classic stages of the market. You move from contraction to expansion, back to contraction, right? And the cycle repeats over and over and over and over again. Okay, so that is the QQQ on the daily. Again, not much to really read into here in the midpoint of the range. If I really wanted to slap a fib on here, we could do the exercise together. I don't think it really tells us much. We're over the fib 61.8, but we know that based on the levels anyways. I would say if you really want to dive into the price structure, you could just kind of say, okay, if sellers were going to make something happen, then this gap fill reversal on the Wednesday session, getting my days correct here, on the Wednesday session should have been game over, and then the follow-up through Thursday, Friday should have been this, and it's just simply not happening, right? So it's very hard to be bearish in a range as you're just bouncing off the bottom end of the range. That's kind of it. I mean, sellers had their opportunity, and I would say the end of the week proved that strong sellers are simply not stepping up, right? So that is your QQQ. Let's take it on down. I mean, we could go intraday anchored VWAPs, but again, in a range, how useful is this really? I'll show you the data point just for the sake of being thorough, but we're above the entirety of the stack. If we drop into here, I'd be very neutral. I would continue to look for long side pressure if we're in the upper third. If this rolls over to the bottom third, maybe it's buy off the lows, and then rotate back to this. If we really just rip straight out of the gates before Mag 7 earnings, like maybe you get a Tuesday fade just off the top end of the range there, just simply trading the range. All that stuff is very possible, but until we actually clear 628.50 or 613, there's not much here for me in terms of a trending market. Let's jump back on over to our internals and check in on the NASDAQ exchange. We can see over here the same exact picture as the S&P. No substantial volume outflows here. Advanced decline lines a little soft on Friday, I must admit. These are about equal opposites. Once again, in a range, there's no secret hidden divergence. Oh my God, we need to short this thing because everybody's selling under the hood. It's just not happening. It's very, very flat as we're inside of that balance. Let's take a peek over at the NQ market profile. Let's give that a little reset. And there we go. You could just see that value is not substantially, but just climbing in the upward direction, right? Here's your value on Wednesday, Thursday, and even Friday is overlapping to up. Notice A period single prints there, a little bit of a P-shaped profile. So, be cautious if we move back down into the Thursday range. Very possible that you need a, A period single print retracement, so to speak. Not need, but could get rather, is the probably proper way to frame that. And simply put, any sort of holds over value area, high point of control-ish area in the NQ futures is the golden zone. We talk about this in the pre-market prep, but really from about 500, I know it's a bit wide, but the NASDAQ's been overshooting. From about 500 to 400 is the key higher low that needs to hold. If you could get that on the NQ futures, which is this box right here, if any higher lows can sustain above this on a daily or hourly chart, you're looking pretty good in my view, and not all hope is lost. Let's get back on over to the platform and let's finish up the index watch with everybody's least favorite index, although I don't know why. This thing's been on a tear through all of 2026, even into the end of 25, right? Incredible movement out of small caps. Let's bump this thing up to the weekly, and let's just do this, our classic. There we go. Let's get those moving averages on there. Awesome. Cool. Wham bam. Thank you, Sam. We have anyone named Sammed out there? Sammed? Sam. So, weekly bar. A little bit more concerning on the IWM. Much larger of an upper wick. You can see that this is clearly on the bar-to-bar count, a higher low, though, and a higher high. Closed back inside the previous week's range. So, do small caps deserve a little bit of a break, a little bit of a breather? I think it's reasonable. The other thing to think about here is just simply that the Fed is likely to do nothing. I mean, the odds of a rate cut are virtually 0%, right? It's really political theater upcoming on Wednesday, I would imagine. Some silly reporter's going to say, hey, Powell, what do you think about the criminal indictment? He's just going to say, I'm here to do my job. I say the same thing every time. Stop asking me these stupid questions. And next, right? That'll be the gist of it. So the weekly bar, just to center back on small caps and price action here, it could cool off. It could pull back. Could it set a weekly higher low? Of course it could. We have lows, higher lows, higher lows. No problems with this weekly trend. In a picture perfect world, you'd maybe just sweep the low, consolidate in here, and then bounce off of that prior high to act as a newfound area of support. And that level is right around our 256. If we jump in here with a Fibonacci from the last major low up to this high, 38.2 is bang on the money there. If we come in here with this, Fib 61.8 right in the neighborhood as well. So making sense from a Fib perspective. Let's jump in with our anchored VWAPs. Here we go. We'll have to set a new anchor here as well. As a matter of fact, we'll just do that in a moment. But we're above the entirety of the stack. Let me bump this. Which one do we want to bump? These are about confluence. So let's take this prior high and go to the low of, what is that? The 29th of December. So let's say 1229, and let's just go from there. Awesome. So that is right at the low of the prior week's bar, and it's very possible that taking that out certainly could put the pressure on. Sorry for doing some of my homework live on the feed here, but putting the pressure on for that pullback into the zone, right? And that's probably more of a day trade or even a short-term trade. We could just check in on the volume profile before getting to that daily chart, but again, just watch your previous week's low on small caps. It is the high volume node from here. That makes sense. It's kind of where you have the most overlap between these three weekly bars, 1, 2, and 3. So it would make sense that that little sliver extends there. Let's drop down to the daily, though. Let's get a little bit more nuanced here with the take. So underneath last week's low, which would be here, you're really just looking at this. It's not a very large move by any stretch of the imagination. You have your daily 20 SMA lower edge of the weekly expected move there as well. So a big shooting star on Friday, pulling back, starting the sequence to the downside. Very reasonable, right? We know that this market loves symmetry. Here. I mean, this could easily pull back as long as you're over, once again, this previous pivot from back here. No problems. At this level is technically 258. right? 258. If you want to get a little bit deeper, I would say it's still okay to hold these prior highs down here at 250, 275. Intraday, intra-week, that of course would suggest a little bit more pain, but you're still going to set some kind of weekly high or low if that's the case for this holding as support. Nice 50 SMA reset, perhaps. Again, I don't think that we're going there just based on the nature of the strength of what's been going on. I would think that sideways consolidation through time is more likely in a situation like what we've been dealing with in small caps. Let's take out on the daily chart. Let's do it, actually. Let's come in here with a fib just from here to see it on the daily. I know we did the weekly, right? But there's your 38.2 right in the neighborhood of these equal lows, making sense at 260.85. Let's now drop down to the hourly and just point out, right, the trade is probably, if you rally and set a lower high here, I mean, not to shock anybody, but there's kind of your head and shoulders, right? And speaking of head and shoulders, you can let me know in the comments section if you've made it to this point in the video. I kind of did not include this in the S&P analysis, but I'm sure some of the bears out there are saying, nope, this is it. You set the lower high here. It's going to be head and shoulders, break the neckline, and then you're just like gone in the market. Sure. I mean, what would inherently have to happen for that to be true, right? We'd have to be underneath 686, and as we've talked about already, that's likely where I change my tone anyway, specifically in the S&P 500. So from a pattern perspective, I did just want to maybe at least bring that up. And again, if you've made it to this point in the video, you now have the insight. You can either choose to let us know in the comments that you made it here or not, and keep that secret insight for yourself. Let's go ahead and, not that, patterns are huge alpha in the market. Let's go ahead and take a look at let's jump on into here with the intraday anchored VWAPs right at the top of the stack here. So once again, very, I would say, clean opportunity for a possible counter trend relative to this hourly break, and then some sort of lower high to be the next big battleground here at 267.20, right? When and if we make the move to this 260.85, just note, I know it's dim and gray, but it is the major low anchored VWAP from here, confluence as of right now. Let's take a peek over at the Russell side of the market internals and what they had at the index level. Remember, it's not technically an exchange. So on the pullback, it would make sense that the breadth here is a little bit weaker. And, it's not really shocking given what happened on the Friday session. Same thing here, advanced decline line. And this build out is very, actually it is. Yeah, there you go. Negative 2,300. Perfect. Negative 2,000 is the big read on the tick cumulative build. So yeah, some substantial taking profit profit taking over on the small caps here. But once again, not enough to make me think that the trend is over or dead. I still am absolutely a believer that you would start to, maybe see some buyers step up here, or at bare minimum this upcoming week, something like the daily 20 SMA near that 258. So still remaining bullish on small caps. In my view, and the strength of the trend that they've had recently is the way to go here. Just be expecting of a little bit of pullback, right? You can't go in a straight line forever. If we take a look at the small caps market profile, just pointing out that this is an incredibly poor low on that Friday session, right? M period 1 TPO of excess. Yeah, there might be, it looks visually like some volume taper, but if you just go back to the hourly chart, I mean, I don't know about you, but 1, 2, 3, 4 hourly bars equal lows there is almost a perfect bear pennant when thought of from this perspective. So I would expect some cleanup of that low. One of the trades, just now that I'm keying into this a bit more based on that market profile visual, would be if you sweep the low, come back into range, that would stage the counter trend to get here in the first place. Then once again, be thinking about the opportunity for the lower high reversal back underneath your prior resistance from over here. But to initiate that first ramp, so to speak, a look below and fail repairing this would be bullish, and that level is 264.75 on the IWM. All right, let's take a peek over at our sector watch. This is where we can get a little bit more granular, and in my view, I think this still paints a picture of primarily remaining neutral and even open-minded to this ultimately being a lower high. So I know I was a little bit more bullish through the actual analysis of the S&P price action alone, but as we provide context or get into context of sectors, suddenly I'm like, I could still see some cracks in the armor, basically is what I'm getting at. Nice rotation into the Mag 7 on that Friday session in particular. Really rallying there, and even Thursday with the meta upgrade from Jeffries there. But Mag 7 up 3.19% on the week. The XLB materials is the lightest weight sector, 3.35 technically leads. XLC is risk on, 2.79%. XLY is risk on, 2.37%. So we are seeing money flowing back into the risk on sectors. Unfortunately, the problem that I still see is just that financials look so darn weak. And technically speaking, although yes, you're green on the Mag 7 ETF, you might be green on this SMH, you might be green on the IGV, some of those technical charts still have just huge opportunities for the deadly lower high. Let's check in on them now. So XLB, brand new all-time highs. It's one of the lightest weight sectors for the market, but it is undoubtedly on a tear in the upward direction. So I would not fight against this. I would continue to look to stay bullish on materials there. No problems with that. Let me just quickly go XHB as well, though. Just want to point out that there's a difference, right? Just materials and home builders do not necessarily need to move in lockstep. I think your basic materials over there, you can think about the metals primarily, are absolutely one of the reasons that the XLB is on such a move. If we look at the Mag 7 here, I am impressed by the failure of the sellers to produce a gap fill reversal here, and I'm not quite impressed by the rejection at the daily 50, daily 20, and the neckline of the micro head and shoulders, which really just makes up the right shoulder in general of the major head and shoulders. Now, we're not even close to the neckline of the major, so let's not talk about that, but this rejection here, if this is like overbaked and overcooked to the upside, and I get it, Mag 7 earnings upcoming this week could easily send this thing on a gap and go. That's a very real possibility here, but at face value based on Friday's close, is this not just an awesome spot for a lower high rejection, right, to do something that looks like that? I think it is. And again, early on in the week, this will be a top priority to figure out where, relative to 6560, does the Mag 7 ETF land? Do we see acceptance above? Do we see acceptance below? If it's below, then I don't think we're out of the woods in the S&P 500, especially, I'm going to bounce around here, with the XLF looking the way it does, right? If the XLF needs a full rotation back down to the bottom end of its range, right, where it has historically caught support over at least the last couple of months, I mean, you're talking about more damage in the S&P 500 that approximately from a percentage move standpoint, it's about 3.25%. It's going to be difficult for the market to really rip to brand new all-time highs if the second heaviest weight sector by market cap is needing to do something like this, right, with a Mag 7 ETF that's maybe suggesting lower high here. So I just want to be clear, these are potential threats to the bullish base case that we've seen in sort of described in the S&P 500. I'm not sitting here shorting the S&P 500 because I believe or think or can guarantee that this is rolling over, but I am open-minded to it. That's, I think, the clear distinction, right? So XLC up next. What do we have over here? Nice rebound back into this balance range, I have to say. Color me impressed with Meta, the upgrade there on Thursday. Really getting the job done, reclaiming the daily 50 SMA, closing at the 20 inside this balance. You could say weekly higher low from here to here, and well on its way to having a daily higher low available. Flipping the trend more confidently up and possibly breaking out through earnings season. We shall see. If we go on over to XLY, this looks decent on a recapture of the 20. I would love to see if this could just balance off and then go. Maybe Tesla earnings on Wednesday are the key catalyst here. And if we move on over to energy, energy continues to be a top story for 26. I think powering data centers will be one of the larger plays here. I don't necessarily think, not to say that NVIDIA is dead, right? The memory complex is its own separate issue with SanDisk, MU, Seagate, and let's say WDC. That's its own issue. But for now, energy, I mean, how are we going to make all the AI work, right? And so energy, data centers in space, the whole 9 yards, you know what they're talking about. This is the next place, I think, noting that this is a multi-month potential breakout here. Multi-year, jeez, apologies, multi-year. So we started the rally here off the sickness lows, if you will, have gone nowhere and are now starting to break out of this bull flag. Right, so it doesn't have to be your classic oil and gas companies, although they might, and should play a role here. But think about other forms of energy, right? Of course, the big nuclear as well as solar, renewables coming into view, energy storage as well. So that's the XLE chart. I think it's important to look at that one every now and again on a higher time frame. Let's go to the XLV. Chart looks great. Hammer candle here right off the 20. If this can set a higher low, great consolidation. Brigade Bolt, brand new all-time highs. The diagnostics and cancer research companies have been on a tear. We saw genomics start to get a little bid on Thursday, gave it all back on Friday. I'd still keep an eye on it though. Moving along to semiconductors, another key component of the market. Cooling off here. That's okay as long as we can see, once again, this is the threat to the base case, financials catch a rebid, the Mag 7s can catch a rebid, and as well as software can catch a rebid. So semiconductors cooling off in bullish location, bullish territory up here, but intra-week, intraday for the market, it's going to be hard to get in gear unless you have those other sectors pulling their weight in the upward direction. Bonds moving in the upward direction after the U-turn on tariffs. Bond vigilantes saying, all right, I guess we'll take some bonds back now here. If we look at the IGV, once again, we're not out of the woods. You do have a green percentage point here on the weekly performance, but I mean, you'd have negative if you measured from prior Friday. We're measuring from Tuesday's open, Monday's open on a full week. 4-day week. What am I getting at here? So main point is just that this is still a lower high threat, right? And this is software in particular. What comes concerning here is Microsoft, literally. aside from that, one of these software companies, I'll just tell you right now, why not? CRM is going to be one of the trade ideas from the end of the video. It just looks horrible, right? CRM is almost a rinse and repeat of this. You could look at ServiceNow. You could look at some of the cyber stuff. I mean, CrowdStrikes of the world have been getting beat up. Adobe has been getting beat up, right? So IGV still looks really weak, I guess is my main point here, for a huge opportunity, lower high, to continue dragging on the S&P 500. Here's the tech sector as a nutshell. So kind of combine your Mag 7, your semiconductors, your software, and suddenly you're left with just push-pull, right? You're in the middle of nowhere, and the Qs as a proxy for this as well tells the same story. That's why I was very neutral through our QQQ analysis, not really willing to commit to a direction. You could say look below and fail, should target the opposing end of range. I think that's exactly what we said in the NASDAQ anyways, but until we're over 147 with confidence, breaking this pivot high, it's just everybody's holding their breath for Mag 7 earnings. I don't know how else to put it, right? If you look at the XLP breaking out of one of the prettiest high-type bull flags we've seen in a while. I mean, look at that classic inside bar. It's a double inside, believe it or not. You have Wednesday, Thursday, and then Friday breaking out through the highs with names like Costco. Let's just show this chart because it's a beauty, recovering the daily 200 SMA. I mean, that's a huge reversal on Costco, breaking through this trend line off to the races over the 200. Right, so pretty impressive stuff for those consumer staples. It's a lighter weight risk off sector. It's more defensive in nature, so we'll continue to keep an eye on it. We don't want that pushing the S&P to new highs. So if the XLK lags and this is pushing to new record highs, fueling the S&P to get there, I would be tiptoeing around new positions long side at the all-time high there. XLRE real estate just inside of its balance range. I think with rates maybe backing off slightly with the tariff deal. U-turn, we'll see what happens over the weekend with these new Canada tariffs. But backing off slightly there, I would think that you could catch yourself for a higher low somewhere in this range, and that would be important for real estate. Think about the wealth effect. If we're going over to utilities, I still don't have a compelling argument for this chunk of price action. Just is what it is. I think the energy story is more compelling for fueling data centers. If we look at financials, this is where those problems start to reemerge. If this is a balance range, failed breakout on a weekly, rejecting the daily 50 SMA, new closing low here on this leg at least as of Friday. So if you're looking for a red flag, look no further than financials. This is problematic. And as the second heaviest weight sector, I know we've talked about this a bunch, that is the issue I see in the market. So long as we stay on a lower high underneath this area here, 5410, I just think that this is bear flag in the short term, and possibly a breakdown here, at least to the daily 200, continues to act as a headwind for the S&P 500. So although the chart looks bullish on SPY, I might be a little timid intraday to take breakout trades unless XLF is on some sort of a heater right out of the gates, at least attempting to get into the top end of its range, right? So that is the story on that. Here's industrials. Looks pretty good up here in bull flag consolidation. No complaints out of this sector, not hurting the S&P by any stretch. Let's jump into our ratio grid and see what's happening. If you're not familiar with the ratios, check out the video tutorial in the top right-hand corner. I still don't think we're batting risk on. This is like neutral to risk not being all there. This is certainly problematic, as we've said time and time again, for financials. Maybe neutral, catching a little bit of a rebid, but not great. I would say that this looks the best of the top four. So these are our risk on signals, and it's just hard to say that this market is full-blown risk on given the picture that we have. This technically signals risk off with staples outperforming, but utilities also aren't doing anything all that impressive. Technically speaking, healthcare is a bit more D for defensive. It's really dialed back its weighting in the index, given everything that's happened to healthcare recently, but nonetheless, it is over an upward sloping 50 SMA. We'll give a little bit of credit over on that one. Let's jump into some of the specialized ratios like the AB set. If we look over here, I'm just going to throw them on. This is neutral. I'd say this is neutral because remember, we're technically coming from a lower low. This is bullish over here. This is neutral to maybe bearish. This is problematic to neutral maybe, and this is just outright bearish. So once again, the full-blown risk-on picture is not all the way there. Maybe that changes this week as a result of Mag 7 earnings. I know a lot of analysts and estimates are for a pretty solid earnings season here, but it's never about it's the market's reaction to the number, right? It doesn't matter. You could beat expectations, but if it's not enough of a beat, then that's also still a problem. The stock gaps down, right? So wait for those reactions to actually come in on earnings results to ultimately have an answer. But I would say just based on the data in hand, the tailwinds still probably point higher in my view, outside of that financial hiccup that we've been talking about. Here's the gold contract and S&P ratio. Gold went out to new record highs, as we know. So this ratio is continuing to scream defensive over here. Hasn't really materialized for the S&P in a big way yet. Those doomsday people are like, S&P is going to crash to zero. Well, not really yet. I think Bitcoin is signaling risk off. Sailor Shift tool here signaling red. And I do just want to say a big shout out to Michael Silva over at Figuring Out Money. He's the guy who created that. I saw him on X suggesting that, I certainly never, I hope he wasn't talking about us, but never intend to, this is his work. And we acknowledged it when we first included it in the show. It's tough to acknowledge every single time, but I feel like the time is due, again, to just remind people that this is his work, ultimately developing the signal. I just coded it up for Thinkorswim, so I had it conveniently here. Okay, so anyhow, that is that one. If we jump on over to the SPY and the TLT ratio, I would say kind of unchanged in this box over here. No problems with that. Risk appetite there seems pretty stable. Let's jump on into the dollar and rates. Dollar getting crushed over here. And generally speaking, I think headed into a Fed might start to signal, excuse me, with the concentration on the labor side of the mandate that, I think the Fed's going to continue to be dovish, basically, is my take on that, which maybe is, puts a little lower rates, puts a little pressure on the inflation front. The dollar weakens on that, so we shall see. Let's jump into let's get into the inverted ZT. Where are you? There you are. We'll save metals as a section after this because, again, I do think there's signal in some of those traders not wanting to participate in the blow off top. Anyways, inverted ZT unchanged here. There's pretty much, no chance that the Fed is going to cut in the upcoming meeting. If we just take a look, whoa, refresh here. Wow, surprising. Typically it refreshes in the morning stream, but I guess we are in business on this. Let me quickly flip this to black. Otherwise, it's going to drive me nuts having to use that red crayon again. Sorry about that. Thank you for the patience, but there we go. 95% probability that on the Wednesday session, we get a pause, right? No change there to the Fed funds rate. And one more time, probably more political rather than policy on the FOMC conference, really, when Jerome Powell is going to go through the Q&A. We'll be streaming this live on YouTube, as we always do, just to sort of check in on the market's reaction to it. If you want to come hang out with us, we'll be live at probably 1:45 Eastern time on Wednesday to prepare for that. Let's jump into the calendar of data. This upcoming week, durable goods orders early in the week there, Monday, 8:30. Looks like Trump speaks on Tuesday, tentative time in the morning, I would think, but we shall see. Typically a little late to events and speaking engagements. If we look at Wednesday, January 28th, there's that big Fed meeting and no SEP here, just the FOMC press conference, which once again, political theater. Don't really expect anything, any groundbreaking revelations from Jerome Powell. If we look at the jobless claims, they've been coming in really, really stable, really, really low. Look at how low these numbers are. These are the lowest numbers. I mean, we haven't. I almost sound like Donald Trump. These are the lowest numbers we've seen in ages, right? So they are really low. We have not seen numbers this low on the jobless claims for all of 2025, basically. So pretty impressive stuff there. It would just indicate to me that the Fed can stay put here, not really lower rates, and probably feel confident, even continuing claims are down as well, that they're not going to upset that side of the dual mandate in a big way, and they could continue to. I know the labor side is going to be the focus, but I mean, let's not forget, inflation's still going to be a part of the conversation. Speaking of, here's your PPI coming out on Friday, 8:30. We'll watch out for it. The big thing to maybe pay attention to is the next Fed chair. The odds over the weekend, let me see if I could bring this up actually over here. Fed chair. Rick Reeder from, let's see, who? There we go. There he is. Rick Reeder right here from, I believe, BlackRock, right? Is really gaining some traction. I mean, blowing out Kevin Warsh here. Kevin Hassett even blown out. I would think, I don't know why he doesn't have a higher probability of getting in there, but Christopher Waller would be my pick. I mean, from the Fed, longtime economist, it just seems like the most tried and true choice in my book. But, Rick Reeder, also very well respected by Wall Street, obviously, coming from BlackRock. So I think that if nominated, the street wouldn't really mind that, right? I think that would be certainly it wouldn't be a big hiccup or like, oh my God, I can't believe that this is happening, right? So that is my take on that quickly in case anyone cares about it. But let's talk a little bit more about the earnings calendar upcoming because it's going to be a huge week, right? Have to say, honorable mentions here, STX, Seagate on the Tuesday after the closed session. That'll be a big one. It's the first of the memory complex there. ASML always before the open on Wednesday will be a big deal. GE Vernova on the nuclear front there. Not as interested in General Dynamics, maybe military industrial complex. We'll see. They announced that $1.5 trillion spend package the other day. Really, Wednesday after the close is where the rubber hits the road. You've got three of the Mag 7s right here. Microsoft, Meta, Tesla. Based on some feedback in the morning streams on the Wednesday video last week, we're probably just going to live stream that on Wednesday. So expect 3 live streams on Wednesday. We're going to do the morning show, the Fed in the afternoon, and then Tesla after the close for earnings. At the same time, we'll be able to take a look, of course, at Microsoft, Meta, Lam Research, honorable mention as well in there. If we jump on over to Thursday, I mean, heck, should we do a live stream as well on Thursday? SanDisk, the one stock to rule them all. It's up over 100% in 2026 alone. Incredible performance. Probably worth paying attention to earnings there. Is it due for a blow off top? Is it going to crash and burn? We shall see. I'd be more than happy to do a little bit of a live stream for that one as well. You can let me know your feedback in the comment section. Anyways, those are the names that have my attention. Of course, Apple, of course, Visa, Western Digital as well in the memory complex, and that's mostly it. Let's jump on over to the earnings insight report here. I just want to point this out. This is for Q4 of 25. As of Q4, look at the distribution of returns, or earnings growth, it should be, of 20.3% for the Mag 7 versus 4.1% for the others, right? So it's about a fifth, right? A fifth of the size there. You scroll down and look at the forecast for calendar year 26. This is all of 26. That ratio is now half. Right? It's a little bit better than half, even at 22.8 versus 12.1%. The reason I'm showing you this is because the market's expectations is that the rally and the strength will continue to broaden out of the Mag 7 names, and looking at the Mag 7 names as the only place to make money in this market is probably the wrong idea into 2026. That's the bottom line here from the earnings report. Let's jump on over back to the platform. Let's finish up with our supporting evidence. Looking at bonds first, we'll get into the metals as a separate trade idea analysis. In terms of this, I like this rolling over. It tells us that the market's a little less worried about inflation. I do want to see this flatten out up here, though, to indicate that we're doing okay on the labor side of the market as well. That would be preferable. If we look at credit spreads, they're still signaling risk on in downtrends over here. Those spreads are tight, not really widening out, indicating volatility. If we look at the junk bonds, they continue to illustrate risk on as well. So bulls, if you're out there and listening, please hang on to the fact that this is a bullish divergence still between junk and the S&P in isolation. This would be a bull feather in the cap. You can keep that one moving forward. Let's take a peek over at total breadth. Breadth contracting a little bit on Friday. We know that the IWM was the only red of the indices there, but not the end of the world because the trend is so strong in the upward direction. This is coasting the moving averages in a really healthy zone. Remember, it could really start to top out over 80%. You start to get overbought if you're up here. We're not overbought. We're just kind of healthy where a majority of things are simply over their 250 simple moving averages. New highs versus lows, again, slightly backing off there. RSP just kind of down, not really an inside day, but relative to this entire trend sequence, lows, higher lows, certainly a possible higher low, holding up over the high of Tuesday's session. Let's jump on into our QQQE just to get a sense for the NASDAQ equal weight. And I don't know about you, but that looks pretty darn primed for a breakout, at least a way to manage risk very tightly into the breakout, right? Very simply, break the highs and go, stop right underneath this low. I mean, even if you just get a small fake breakout, you could probably get a 1.5, 2 to 1 on that trade with a loose stop. That's like, forget about an intraday 5-minute Brigade bolt, 2-minute Brigade bolt. That's like using the entire previous day low as a possible stop, right? So QQQE also indicating some decent action from a breadth point of view. Let's jump into volatility, which has been absolutely crushed here, down back towards the 15 handle. I'd be curious to see if this ramps up headed into not just the Fed, but really Wednesday's earnings from Microsoft, Meta, and Tesla, as well as SanDisk on Thursday after the close. I would expect volatility to either stabilize here and then get crushed post-earnings. If we jump on into the VVIX, we will likely see the same. Yeah, underneath the 103 trigger is like warnings have been turned off, basically. And if we jump into our volatility futures, oh, don't tell me we're not going to load here. Thinkorswim technically is under maintenance for the weekend. Uh-oh, not loading. I'll see if I can throw up a screenshot as and if I can pull it up on a different data point. But I will just let you know that we are technically in a contango, and I'll show you that. Actually, I won't even need to pop in the screenshot if this is also working here. Oh, thank goodness. No screenshot, no editing. It's going to make my job a little easier. This is in contango, right? What I was trying to show you there was just that the curve is still naturally in this direction rather than inverted, aka what we call backwardation, just meaning that volatility right now is lower than some unknown future, right? If volatility is higher now, money managers are not going to put money to work, right? And we don't have that situation. This is comfortable for those money managers. One day, oh, look at that. Now it's loaded in the background. All it took was a little bit of a reload, huh? There it is. There it is. There it is. One-day VIX, I would imagine, creeps up into the earnings cycle and then gets crushed as those earnings are released. Okay, that is what we've got. Charts. Hopefully maintenance doesn't throw stuff off. Let's see if we can finish on a strong note. Core list of companies, and then I've got a couple of trade ideas for you. So NVIDIA, what do we have? Kind of a sloppy chart. I don't love this chart, and again, it's no longer the one stock to rule them all. The baton has to be passed. So the market's been doing this time and time and time again. If you haven't noticed, it's ramp it in the morning to fade it in the afternoon, right? That's the same theme we've been seeing over and over and over again. Now, it is up off the lows. So you got to give some credit where credit is due. We've retaken this low. We're also back inside of this box. We took back the 50, the 20. Do I see a huge trade opportunity in this bubble? Not really. If NVIDIA wants to do something that looks like this to go tag its overnight earnings high, maybe, but it's just not really. I don't see NVIDIA as being primed for opportunity like it had been, through its big rally here off the April tariff lows, or even some of this, right? As it started to break out ahead of earnings, there were some really nice days back over here. We've sort of lost that look. So you don't want to lose sight of this being the heaviest weight component of the S&P and the NASDAQ, but it's no longer really a top priority to trade intraday. If I jump on over to Apple, I do think that this could go counter trend ahead of earnings. You got a nice hammer here. Technically, what this does or indicates is you swept, under this low, not quite this one, but this is a weekly pivot. So you broke a couple of daily bar lows, did not find acceptance from the sellers on the lows over this high, and really more importantly, over this 2-day equal high here. I'll show you on the hourly. There we go. If this is just going to be double bottom, right? Over the neckline here, thin structure to retrace into the bottom end of the daily bear flag, which broke in the first place, right? That's 255.85. And once again, going out to maybe a weekly chart for this illustration, I like the fact that it is starting to wick on a weekly, on a daily, right off that prior pivot. So is it time to dollar cost average into Apple? Maybe. Just be mindful of your earnings coming out on Thursday after the close. Let's jump on over to Microsoft. Take the analysis here on any earnings candidate with a grain of salt. Earnings can blow out the chart in either direction. I have to say, very impressive rally on Friday. It is right at the spot where it should be, or it could be, rejecting for a potential lower high here to keep the daily trend down. You got a big break, counter trend. This is a great spot for a lower high. Right, so personally looking for some rollover on Microsoft here. I just don't know how convinced or aggressive I will be with earnings right around the corner. And by the way, now is a good time to also remind folks, we will have, and this was the latest as of confirmed last Friday, we will have Monday, Wednesday, and Friday expirations on some of the Mag 7 names here with options in the coming weeks worth of trade. The NASDAQ had released that for January 26th, which of course is just the Monday session. So be prepared for that. We'll see how they trade. What I'm mostly concerned about is the vacuuming up of liquidity from the Friday options to go all out to, whatever the closest is. And then unfortunately, it'll be like, okay, Thursday, Friday is the only time to trade these. I don't personally like that. I'm more of a fan of not allowing 0 DTE theta to just kill my positions, but markets are ever changing. Strategies have to be ever changing. So that's the primary thing to just remind folks of. And again, Microsoft lower high here at 468 is something to pay attention to ahead of earnings. If it does roll, we have really thin structure on an hourly. Notice there's nothing stopping it here. What goes straight up can come straight down. I would be looking for at least about 450, 650 if the market is weak and we could find a short here ahead of earnings with respect to IV, implied volatility. What would be cool is if earnings, let's just go back to Microsoft for a second. If earnings are on Wednesday after the close, you could maybe trade the Wednesday expirations, which wouldn't be impacted, but the Fridays would be, right? So that might be like an interesting way to trade names that have earnings without getting too frazzled by IV. You have to wait and see how those Wednesday options trade, how they're received by the market. Anyhow, let's jump on over to Amazon. I like this chart much better than some of the other Mag 7. This is one of the names that I remain long of from a swing perspective with shares. It's just, I can't get past the story of robotics infrastructure, having the network. It's more than just, of course, AWS, big part of the business, but they seem poised to be a big AI winner, not just your Microsoft, which we're seeing based on the price action is maybe not as much of an AI winner. Think about those software stocks, right? All that stuff just kind of going out the window. So, Microsoft, of course, has Azure over there. So I'm not trying to say that the company should be at zero, but I'm just saying Amazon, in my view, with robotics, with infrastructure, network, the whole thing, it just seems more front to back poised to be a beneficiary. With that said, I think the stock is performing okay. I like the fact that into the end of the week, it came back out of this breakout point here and is just has an opportunity, I should say, to consolidate back over the bear flag lows. If we go to the hourly chart, I mean, what a great spot for a potential lower high, keeping overhead supply. It just didn't happen. So the fact that Amazon could do this and then Brigade Bolt here back up through these highs, that to me looks fantastic. So I'll be watching Amazon on the long side here more preferably. If it pulls back into this zone, I would also still watch for higher lows over the 50 simple moving average, and there are no earnings on Amazon this week. We're free and clear from an options perspective. Google, another one with no earnings, not this week, but the week after. As we take a look at the chart here, I think it's still in a nice uptrend as you sort of just count the higher lows off the 20. Little hard to get involved. Like, you just have to buy it at the 20. We've talked about this time and time again. So on Google, you could probably wait for two entries, either a break of the trend line back to the all-time high or firm up the 20 again, 322, try to bounce off of it and sustain a higher low in this zone there. If you're underneath it, I think this gets noisy. The 50 is really starting to catch up in a more aggressive manner. Notice the distance between the 50 here. Notice the distance between the 50 here, right? So if you start to just go sideways and cool off and do nothing, it will become a threat. If you lose the 50, all the momentum players will probably be out. When I say momentum players, I'm talking about position traders, swing traders, not just day traders, right? Day traders don't care. We'll go long, short, whatever around the 50, but that longer term money will likely come out if you start to drop the 50. So just paying attention to that on Google. If we consolidate over the next few weeks, again, earnings could easily change this, but through the 50 would be a problem. Let's jump on over to Broadcom. Again, just look no further than Broadcom. Through the 50 becomes a problem. So awesome shorts this week doing battle on Broadcom and closing some of the gap. Nice hammer there on Friday. I think it could go counter trend. Right? I think it could go counter trend here, 334.50, set the lower high, and then rotate back in for that full daily 200 test. Earnings are always much, much further out on this, or unless you wanted to count it here. So that is the name of the game, and lower highs that persist below 334.50, just keep the shorts in play. That's my main thesis on Broadcom. I would remain bearish this company, or this chart even, as long as we're underneath what I would consider the major breakdown spot where it all started, 334.50. That's it. Okay, so counter trend, let it go. Here, if we go on down to the hourly, any nuances to pick out of it. I mean, it could even be gap fill reversal. Close the gap above to close the gap below. That's a possibility with Friday's hammer there. So something like this, right? You would want to be short on the white dot, something like that. Close the gap, confirm back inside of Friday's range, rotate to the lows here to close the gap 309. Certainly a possibility. Let's keep going to Meta. Meta, of course, has earnings. So again, take the analysis here with a grain of salt. I mean, massive double bottom on the daily there. Everybody and their sister can see that. But, earnings will either send it through and up here or down, and now we're testing the lows. It's no longer a double bottom. It's just a rectangle. I do have to say I'm impressed with the recovery through the 50 to 20 on the upgrade there from, we've talked about it already a little bit, but Jeffries on Thursday. If there was a spot for a lower high, it should have been underneath this overhead supply. It didn't happen, and we did even get some follow through there on the Friday session. So if we drop it on down to the hourly chart, pretty nice momentum moves here out of something like Meta. I mean, higher lows in the zone, you could watch for it. I don't love trading in this price action, but undoubtedly, the only thing to really watch for here is either a hold of 654.50 and rally. You pull back to here, which is the high from, ignore this funky upper wick. I don't know. I think there's been such a pain recently, but maybe they're working on that update now. I would say 647.25, and then absolute line in the sand just has to be the 50, right? 637.50 here is the actual number. So looking for higher lows on Meta, and then maybe earnings just totally throws a wrench in the mix. We shall see. Tesla, once again, nothing really good starts to happen as you lose the 50. Nothing good. Came back through it. Nothing good. Nothing good. It's been a little bit more of a pain recently. So I'm just looking for the stock to firm up. I would love it if it could be symmetrical and start to do something that looks like that. I just don't know that we have that opportunity timing-wise with earnings on Wednesday. So preference would be for higher to get this thing in gear. I know a lot of people are still thinking about that 500 figure up here. We just came a couple pennies shy. So we'll see. Another one that, I think a lot of people think are poised robotics-wise, AI-wise to be a huge beneficiary. One of the winners takes all. So in my view, over 456, right? I think you're working your way back up into this upper range. If you could pull back, you really just have to hold higher lows. Hopefully around 436.75 would be where I'd want to see that right shoulder start to build if we do have, again, some sort of timing there ahead of Wednesday's earnings. It's going to make it tough. Let's move on over to JP Morgan, see what's going on with this. We know financials have been weak, and I mean, JP Morgan's no exception. So lower high here underneath that breakdown low. I would just still be looking for the 200 SMA. I'm looking for 290, 250. If this can go lower highs in here, shorts are on, and we're looking for this into the equal lows there. Okay, straightforward range trade, look above and fail, lower high, and continuation to the bottom. Next move is Palantir. Palantir, and a beautiful little lower high there on the Friday session, and that's underneath the original junk drawer low. We'll see if this does stage a bear flag and ultimately break lower. Earnings are a little bit further out on this one, not quite this week, but the next. So we'll pay attention to that. But for now, bear flag, and I would think that this low is in dire need of repair. I mean, this thing is just so poor intraday there at this 186.45. Any sort of like rollover into the level, that is, the short that I would be watching for there. So good opportunity here on Friday. Looking for it again underneath Thursday's low, 165.45. If it's going to be long, I don't love buying it into these moving averages. You would have to prove it to me via something that looks like this, and then maybe earnings sends it back to the upside, low, low, higher low, right? Inverted head and shoulders look. It's a pretty sloppy chart on the higher time frame here. One thing to maybe not ignore if you're a longer term investor, right? You're just kind of looking at this as, okay, you're building out some new base up here. What you don't want to see is a stage 3 top. You just want to see a late stage base here and then sort of continuation out of it in the upward direction. So pretty critical that this does not lose the 151 area, or even, if you just go back down to a daily, you can't really afford to lose the daily 200 SMA. You want to see the daily 200 start to flatten out, let the balance remain above, and then hopefully, if you still want to be long the stock, break up and out of the range in the, maybe second quarter of 26 upcoming. Let's go to AMD. Let's take a peek at this. I think this easily offers an opportunity for a pullback in here, and pullbacks should be buyable on AMD in my view. That's not a recommendation. You do whatever you want to do, but I'm just thinking relative strength, the clear winner over the NVIDIA chips, at least as of late, between the two top dogs here. And any pullbacks that stay over 238.35, I just want to position in there for a higher low, right? Something that does this and possibly continues. Strong break out of this base, looking for that relative strength to continue. Earnings a bit further out on this one, not a concern as of yet. On the hourly chart, this could either go gap fill reversal, high and tight consolidation, Brigade bolt new highs, or in the range. That's fine. I personally don't know about shorting it through here, but rather just waiting patiently to see what happens at 238.35. Can I pick up longs around this area back in the upward direction, targeting, the range to travel through would be back up towards the all-time high there. Let's jump on over to Robinhood, which continues to look just absolutely awful. Caught a little bit of attention from the club, CNBC club, on Friday, but not enough to close a strong bar. Huge failure outside of a 3-day balance range. Look above and fail. I would expect at least the 200 early on this upcoming week, which is a couple points below us at 102.40. If we take a look at the hourly chart, you can just see this big failed reversal, right? And for now, underneath these lows, 105.40 opens the door. There's that daily 200. Reevaluate at the 200. It's usually a lot of buy orders resting around that area. So that is Robinhood, and generally the daily chart still looks more bearish in a downtrend here. Let's jump on into these trade ideas. Let's maybe stay on the theme of, Robinhood isn't really software, but we'll go CRM, sticking on the theme of bearish. If I could type there and get the M in, that would be great. There we are. So just like the IGV, big breakdown here, lower high, and looking for continuation. Look at the inverted hammer on Friday, right off of that 229 area. If we can get a break of Friday's low, I would expect at least the equal lows in here at 220. This thing has been absolutely bludgeoned. What goes straight up comes straight down, and even further, right? So this counter trend lower high is right off of the right spot. If we go in here and take a peek, well, first of all, just look back at the origin of where this rally started. I would say it was really this ignition, right? Boom, first green day that held, and then off to the races, right? So that, and equal low back here as well, even if you wanted to count that one. So that's the origin, and that's where we're starting to reject. And underneath Friday's low, I think you have just simply that. So big bearish lower high on CRM, Salesforce. Sorry, Mark, but I'm not liking the stock right now. Let's go on over to MU. Let's take a look at Micron. This is not something that I think is for the faint of heart, but underneath the low of this bar could suggest a pullback that begins into this high back here. There's two ways to trade this. Number one is if you are a person who can respect your stop losses, step aside when you need to step aside, take the quick loss, and just move on to the next idea. Yes, you could try the short underneath Friday's low, underneath 390, 385 to get back down towards this daily 20 SMA breakout level at 346.25. If you're not the type of person who can take that trade, wait for it to break and wait for it to get here for a daily higher low and then try the long in just what has been an absolutely monstrous trend over the last little bit. I mean, just look at this thing. I don't even want to measure. It's going to make me sick to my stomach. From the April lows, the most recent highs, 31%, Huge move, right? So that's MU. Interested in, a little bit of topping action here. If you just take a look at the hourly, big rally that fails. If we accept back inside the 2-day range, I think late stage buyers throw in the towel. We'll look for it lower, right, than in here. So 2 ways to trade it, but MU, very interested in that chart. MP, sticking on the theme of Ms, we'll go with MP. This, of course, is the rare earth or the metals over here. So I think this is just interesting as a possible break to the upside. We've already seen it in USAR, right? USAR already went through a similar setup here. It was one of my favorite setups, the whole Greenland thing over the neckline. Awesome. So finally breaking there into the end of the week on a nice increase in volume, thin structure retracement, perfect. But MP just hasn't gone yet, right? So if MP wants to go, it's got to be up and over 70. Target would probably be the origin of the breakdown there. Let's grab the proper tool. Origin of the breakdown right there around 80.50 would be the first place that I look for that to come into as a potential upside resting spot. That's MP. Next up, I've got a couple of data center ideas. Then we'll talk about gold and silver. So data centers, let's go with my favorite, which is just HUT. I love this HUT chart. This to me is like the total encapsulation of a Brigade bolt over a nice rounded saucer bottom. So I would love HUT to sort of break out of this bull flag and continue to hold over roughly 50-50 right around in here. Daily 20 SMA. Notice the undercut and reclaim. You could call it that. You could call it look below and fail. Whatever term you want to use there is great. Nice strong close back inside of this consolidation, possibly looking for upside. Look no further than an IREN, of course, doing the exact same thing. Nice saucer bottom, cup with handle, whatever you want to call it. It's also recaptured the neckline of the double bottom from back over here. Another new kid on the block, GLXY, Galaxy. Shout out to Tom, of course. And this thing just looks great, right? Same idea, same level. CLSK, I don't know how this one looks, but let's check in. CLSK, not quite up against its breakout point. This chart would be a laggard in that group, I would say. What about a Cypher mining? A laggard in the group, in my view, very noisy in the moving averages there. What about an APLD? This thing looks great. I would say this is also up there with the HUT. This is right there with HUT and Galaxy, honestly. Really nice looking chart over here on APLD. What about Hive? It's one that hasn't gone yet. Yeah, I'd stay away from the Hive. Maybe a tight risk entry against the 200 if you believe that this is going to go, inverted head and shoulders and really get going over the neckline if they can strike a deal, right? That would just be something to monitor the news for. And then what about a CORZ? Cores, not bad. Not bad over the neckline here. I'll give you 2 more and then we'll move on. Riot blockchain, right? Now getting some data center stuff. That's pretty interesting there. Riot, the daily bar looks pretty rough. And then Marathon. Not Marathon, but I think it's just Marathon Holdings, right? Marathon Holdings. Anyways, this one doesn't look great. I'd stay away. Interesting thing, just it's on the top of my mind because I was looking at the stock the other day. But FTAI, these guys are the company that are using turbines, right? Jet engines to fuel data centers. Okay, so this chart is one that I don't think you should take your eye off of either. Very linear move, high, strong increase in volume. Pullbacks to the first 20 test. I would be interested in watching this one. Fuel for data centers, not the crypto names turn data center. Anyways, just thought I'd throw that one in there. And then we'll go to the metals, gold and silver, right? So huge linear breaks on gold as well as silver, SLV. I just want to say, I hope that in the intro, right, when I say that some of the most well-respected traders are throwing in the towel on this, I mean, those guys have my utmost respect. They throw in, they're serious about what they're doing in these trades. And so that was more of a comment about if the best of the best can't pick the top in silver, then I just don't know that it's the most lucrative trade to continue chasing until the perfect star alignment is there. It's either you're long silver, and you're just letting this thing work in your favor, and oh my God, this bull run has been so fantastic, you're making money hand over fist. Or if you're trying to short silver, then just like, there's no reason to step in front of the moving freight train. Commodities have proven that time and time again, unless you've been very selective about like 1 or 2 days holding the short, right? And I played that game. I played the 1 day short, not in October, but rather, where was it? Back over, I'm going to lose, here it was, this day on the 12th of December. There's a 1 day short there, but it's not a short to hold. So my main suggestion or just idea or my 2 cents, if you will, don't step in front of the moving freight train unless SLV, I'll just give it to you on silver. You could, find similar logic for gold, but unless silver has a volume bar that's north of 250,000 shares on a day, and we're, well extended through the upper Bollinger Band there, by many multiples, I just don't think you want to don't bother, right? You're going to get more paper cuts here, and certainly going to get run over if you're not willing to stop out of the position. So just continue to watch that on silver. Monitor your volume. It needs to be picture perfect, and then maybe it goes. Look no further than something like a platinum. This thing's just starting to break out of a wedge here. So I think metals can continue to go for longer. And I guess they're just kind of proving that they can continue to go for longer than many people ever expected in the first place. And again, unless you're like very, very tactical about that one day, intraday short that maybe lasts 30 minutes to an hour or what have you, and then you're collecting your profits and then moving on, it's not, don't look, I don't think that you could look for the top here without a very obvious blow off with volume, right? And the volume has to be the key. The only reason that this was even shortable and it happened overnight, right? Look at how much more substantial, if I just open this volume pane up, look at how much more substantial this volume was here versus everything else prior, right? Now look at the type of volume that silver is doing. Like, this is the new normal on silver. So you need to wait for, again, like twice as much, 1.5, 1.75 times as much as the volume if you think it's going to be a capitulation blow off top. Those are my 2 cents. So do with that what you may. Stay long metals if you're long metals. And if you're trying to short metals, just wait for the no-brainer volume bar that maybe suggests it and keep it brief intraday. That's it. That's all I've got. So my 2 cents added to the conversation. Hopefully you enjoyed today's episode of the Weekly Watch List. If you did, let me know down below in the comment section or by giving the video a very simple thumbs up. Look out for many, many live streams this week with everything that's going on. Fed, Tesla earnings, and even SanDisk. 8 a.m. Eastern time is when we kick off the pre-market prep here live on the channel every morning, open to the public. Hope to see you there on Monday morning, bright and early. So with that said, have yourself a green trading week. And as always, I will see you in the next one.